July 29, 2025. Global trade remains a key focus. U.S.-China trade talks are restarting with hopes for a truce extension, while the U.S. and EU are racing to finalize a significant trade agreement despite some criticism. Tariffs continue to pose a nightmare for U.S. companies, impacting profitability, supply chains, and credit conditions, and are expected to result in higher prices for American consumers, particularly for medicines. However, the U.S. merchandise trade deficit narrowed more than expected, potentially boosting GDP. Corporate earnings present a mixed picture. Major healthcare player UnitedHealth Group is facing significant headwinds with falling profits, rising costs, lowered guidance, and investor backlash. Pharmaceutical giant Novo Nordisk issued a profit warning and saw a CEO change due to competition hitting its popular drugs. On the positive side, Boeing reported strong Q2 results, with increased deliveries and reduced cash outflow. In major M&A news, Union Pacific is set to acquire Norfolk Southern in an $85 billion railroad deal. Conversely, UPS reported a rare profit miss, citing macroeconomic uncertainty, and Apple is closing its first store in China, signaling slowing consumer spending. The broader market awaits a monster week of earnings, with a focus on AI investments from tech giants like Meta. From a macroeconomic perspective, the Federal Reserve is expected to stand pat on rate cuts amidst pressure on Chair Powell. Investors are bracing for critical economic data on consumer spending and prices. While S&P futures gain and the dollar climbs on signs of a buoyant economy, underlying vulnerabilities are emerging. U.S. credit conditions are deteriorating, $23 billion in CMBS-linked loans are paralyzed, and even top earners are falling behind on credit card and car payments. Discussions are also underway regarding potential European joint debt as an alternative to U.S. Treasuries. The boom in AI is also notably stressing the U.S. power grid.